Hello everyone, welcome to another weekly video wrap-up. Now, let's begin today by talking about the Federal Reserve. Now, as you know, we did get that Fed pause or skip, as they like to call it, during this week. Now, what does this mean for the market? Well, of course, most would expect that the Fed may be done raising rates, especially in the face of what we can perceive as lower than expected inflation. And this is a trend that we've been looking at for a while, with that inflation rate really coming down. However, if we look at the Fed's dot plot, which is an assessment of where Fed policymakers think rates will be, we can see that most of these Fed officials expect to at least hike one more time. We have here most people here looking at a 5.5 or even a 6% terminal Fed funds rate, which would imply two more rate hikes. Now, if we look at, for example, the CME watch group probabilities, we can see that for the next meeting on July 26, 74.4% of participants expect a rate hike. So after a pause, most people seem to be expecting that the Fed will hike again. And this is not unprecedented. We've seen this happen with other banks, other big central banks, such as the Bank of England. So what does this mean for markets, which are, of course, getting quite overheated at the moment? Let's begin by looking at the NASDAQ, which is, of course, one of the main charts we've been looking at recently, especially given such a big rally. Now, as you know, I am expecting a pullback, and I think we are really getting to that area. And I think that, obviously, to the extent that the market is not expecting those those hikes, so if we look at the dot plot, excuse me, and we look at that red line, which indicates the effective rate implied by the Fed futures price. Yeah, so this is kind of, the market is actually expecting much more a accommodative policy, right? So we can see that to that extent, the market may find itself being surprised and perhaps initiating that pullback. And I do think this could be a catalyst for the pullback that we are expecting on a technical level. Now, if we look at our chart here, we can see that the NASDAQ has completed, within our wave 3, has completed a 1, 2, 3, 4, and I believe we are basically in the late innings of the wave 5, a wave 5 that hypothetically could take us anywhere in this green box, and we have reached that green box, yeah, just about the middle of it, with the NDX reaching about 15,200. Okay, we have that 1.618 extension, 15,640. But in either case, I think a pullback is due. Now, not only do we have that resistance from the 1.618 extension, or that target laid out by the fib levels, but we also have the resistance from the upwards trend channel. And of course, we are seeing clear signs of exhaustion. Now, the RSI did make higher highs recently, so not really seeing that divergence yet, but we are very overbought here. Of course, this would be typical of a big rally like we're seeing, but nonetheless, we do need some sort of pullback. Now, this doesn't have to be necessarily a big pullback, okay? We have had, within bull markets, we can see pullbacks that, of course, take us only down about 10%. Now, if we look at where the channel is right now, the pullback from about these levels would only be about a 7% pullback. Okay, so not necessarily very high, very large pullback. Yeah. Now, even though this is the support offered by the most recent trend line, we also have, for example, the 50-day moving average down here. And of course, if we looked at the fib levels, yeah, assuming that perhaps we have topped roughly around here in our wave 3, we would expect from an Elliott wave perspective, a wave 4 to take us, well, for example, just right here, we have a good confluence of all the levels, yeah? So we have, on the one hand, the 38.2% retracement. Here we have the support offered by this trend line, and then we also have the support offered by this other kind of trend line that we formed from here, yeah? So this kind of trend line here that we, of course, broke out of, but nonetheless, it's also good. And just below that, we would have the 50-day moving average coming up, though probably a little bit lower, okay? So that is kind of the target area that I'm expecting to reach. And I think that it's very possible that we get there. We are seeing momentum really shift. If we look at puts to call ratios, the market has turned very, very bullish, complacent even. So this is really the time where we start a pullback. Now, in the face of all this, we do have Bitcoin, okay? Bitcoin, on the other hand, is bouncing off of support. Now, we have got quite a convincing bounce, and hopefully, and I say hopefully because we are risking now entering into bear market territory again. Hopefully, this is the bounce that we've been looking for, okay? Now, we can see that we did kind of just about break below this previous high, what I pointed out as a kind of neckline of our structure. Zoom out, look at this on the daily. Yeah, so we had this kind of an inverse head and shoulders forming here, and this would be our neckline, right? And as we can see, we have broken below it, though we kind of find support at it, okay? On the other hand, we could also talk about basically this wedge over here, yeah? So rather than that trend line, we could say we form more of a bit of a wedge, and we're getting ready to break out of it, okay? Now, this would be quite a bullish structure, which would imply that Bitcoin, if we can break now above this resistance, let's try and draw this properly, that if we can break above this resistance over here, then we could definitely pick up on our bullish momentum. Now, it will be difficult, I believe, to see Bitcoin rally as the Nasdaq goes even lower, but it's not completely unlikely, okay? So I have been talking about that rotation before from Nasdaq, not only into IWM, but crypto could also be a beneficiary. And I mean, we're talking about a reasonably small pullback, maybe 6, 7, 8, maximum 10% in the Nasdaq, which would offer us a great opportunity to buy. So that doesn't necessarily mean that Bitcoin is going to go lower. Okay, so we could get hopefully a bit of a pump here in Bitcoin, a bit of a rally, and then maybe just see it kind of marginally outperform. And again, it's possible to get green days as the Nasdaq falls. Okay, now the big headline news in crypto is, of course, the BlackRock ETF. Okay, so BlackRock has filed an ETF. And of course, the timing couldn't be better, right? Just after the SEC has come after Bitcoin and Coinbase, BlackRock is filing for this ETF. And it's actually going to do so partnering with Coinbase, as we can see here. BlackRock's iShares Bitcoin Trust will use Coinbase custody. Now, of course, very important to point out here that this is actually a trust, okay? And it's going to be, to that extent, pretty similar to Grayscale. This is not to say that it won't become an ETF, but it will actually work pretty much like Grayscale for the moment. Although this BlackRock fund might actually allow redemptions, right? So to that extent, it could force perhaps Grayscale to allow redemptions. And ultimately, it is interesting to see, you know, what you might call a big kind of institutional players such as BlackRock getting into Bitcoin in such a way. Yes, there's a lot of examples of BlackRock getting very good timing on these kinds of things. So we could definitely see something like this happen, okay? Now, let's move on to some of the altcoins, because the altcoin market, of course, has suffered significantly. Now, Cardano, which is one of the altcoins that I do like the most, is has came down here to about 22 cents, making new lows basically, and actually entering the range which we had originally. Now, of course, I did change to a bullish outlook once, you know, we broke levels of resistance above. But if we zoom out and look at the daily chart, we can see that something like Cardano, yeah, if we look at the fib levels here, we can see that we just about tapped that 50% retracement, yeah. So actually, this is what we were originally looking for that this retracement wave to even the 61.8 down here at 11 cents, which again, we can't discard the moment. And at the moment, I am expecting one lower low. We are very oversold on the daily, and though we could make an argument for this being over. This would look better to me at the very least with one more low. Okay, as we can see here with a 1, 2, 3, and a 4 and a 5. Okay. So for the moment, we are expecting somewhat lower lows on the altcoins. However, in terms of playing this, I'm not counting on that low low. We're not selling here. Basically, we're looking at just holding and accumulating further down. Okay. Now, in terms of that, we also have some other interesting opportunities in the market. Okay. Now we can see here on the altcoin list, what I've basically done now is reduce this list to the biggest opportunities that we have in the sector. And these are, for the moment, some of the most interesting names. We can see, for example, AGIX, which is, of course, our kind of AI play. And this is starting to reach the levels that we would expect a reversal at, okay? So we pretty much tapped that 50% retracement in AGIX, kind of like in Cardano, and to that extent, we are beginning to see a shift, but like Cardano, one more low could look better here, to be honest. Okay, unless we were talking about some kind of a truncated fifth wave over here, yeah, it would look a lot better with one more low, kind of just tapping, getting a little bit deeper into that 50% retracement, okay, at 0.16, and that, okay. Now, similar with other stuff, XRP, of course, has been one of the better performing coins and one that has captured a lot of interest as of late. So let's have a quick look at this chart. Now we can see here that we actually completed a 1, 2, 3, 4 here. We're actually now in what I would expect to be a wave 5, okay? Now we haven't actually broken above the wave 3, so again, we need a little bit higher. If I were to break this down, I think we have enough to count here an initial impulse here for a 1, a 2, a 3, 4, 5 back into those highs, okay? So a 1, 2, 3, 4, 5, okay? Over here for that impulse. With that said, in terms of the more micro count, we can see that we're now retracing in that wave 2. And in fact, that wave 2 has just about tapped that 61.8% retracement. So again, I think we are definitely, if we're going to hold these levels, we are seeing a lot of coins very close to those levels, to those reversals. So again, the play here is to accumulate a little bit lower. I don't think there's much left to squeeze in terms of a short, even if we do break a little bit below. Okay, I think the reversal is incoming pretty soon. Okay. With that said, I also wanted to wrap up by talking a little bit about the TA opportunities. Now, I'm looking at adding a few more of these for now. We have a couple of opportunities that we've listed. So unlike the trade ideas, the trade opportunities, the TA opportunities are just based on the technical analysis charts and certain breakouts seeing there. TA opportunities I'm not necessarily invested in, although I did buy some hood stock recently. And basically this is what we were looking for, right? This breakout here. And the fact that if we look at the daily chart, yeah, and that, for example, visible range volume profile, we don't really have any resistance above, and we could really begin to run, okay? So again, now this kind of flies a bit in the face of what the general NASDAQ is going to do, but again, there isn't necessarily a direct correlation, and I have said that, if you look at the NASDAQ, the mega caps are much more ready for a pullback, and those could pull back, bring down the index. So kind of a reverse of what we've seen, right? The index come down while a lot of other stocks actually perform very well over the next few weeks, right? Again, for example, we have hood here, right? Breaking out of this very important level of resistance here, and basically now setting up for what could be a pretty fast and furious journey up perhaps into higher levels. Yeah, we have, for example, we can see here we broke above the the key moving averages on the daily chart. And then if we look at the weekly, also, of course, breaking above there. So again, momentum in this stock, for example, has really shifted to the upside. And then, for example, we had Plug Power, which again, a stock that I like to play with sometimes in terms of trading. I think that it offers some interesting volatility. And for example, we are right now falling into this range that I was expecting with this retracement in the wave 3, taking us perhaps down to this area. So I would be looking at adding Plug around the 9.8, 9.9 zone, and then for a quick lift up into that $13 area, maybe that basically this area here. Of course, that's where we begin to find some meaningful resistance there. Yeah. Okay, and just to wrap up, I also want to talk about my latest trade idea. Of course, the copper miners, which are so correlated with China, and with China having that, giving us that sign that they're going to start impulsing, rather stimulating the economy again. It's definitely a very interesting play. And so we did add some of the copper miners. Now, I would expect us to perhaps now, after this rally, to perhaps retest some of these moving averages down here. Okay, so maybe we could pick up some more shares. Now, we did pick up shares around the $39 mark, I think, maybe a bit lower. Well, now, we've run a little bit since then. So we do have a position open, but I would expect us to perhaps get a bit more of a pullback into some of these areas, okay? Now, since we are talking about commodities, I also want to have a quick look at gold, okay? And gold sliding down kind of as we expected, yeah? Like I said, I do think that something like gold and silver do have a little bit lower to come, okay? We can see gold now pretty much struggling with those key levels of resistance here. So it's going to be interesting to see what happens here. But overall, I do think that we could see us gold retrace about 174, okay, to hit that Fibonacci retracement down there. Meanwhile, of course, if we look at energy, we have had a significant rally in energy, although, you know, a lot of volatility. We can also say, I mean, we can see how basically quite a lot of up and down over the last few days. Yeah, we did get an even lower low over here. Okay, so we really need to break above these direct levels of resistance to really get momentum picking up. So I hope that we can do that in the coming days. That is my primary expectation, and we have to watch out for those levels of resistance. Yeah. So this black line over here, this trend line coming in, and then of course we have the 50 and the 200-day moving averages not far above. Okay, so we're going to be struggling to get away from those, but we have some room to run on the RSI, and I do think we've established a nice triple bottom here. So in terms of playing this now here, we have some kind of a margin of safety from a technical perspective, and of course we have all those I believe some positive fundamental catalysts with, you know, a lot of the supply really being constrained. You know, we had that OPEC meeting with supply being cut. So again, I think that as the economy recovers and surprises us with the resilience, especially in some of the international markets, we are going to see oil return to its previous highs. Yeah. So guys, that's it for the update for the week. I hope you enjoyed it as always, and stay tuned for more. I will be out with the weekly report on Monday, and I hope you have a great weekend, and see you then.